supply chains are facing constant disruption, from rising geopolitical tensions to rising delivery expectations and the rapid adoption of AI. To understand what comes next, on this edition of Big Business Bet, we have with us the Shipsy's co-founder and CEO, Mr. Soham Chokshi. Hi Soham, thank you so much for joining me on WION today. Let's start by talking about your global presence. What are you seeing with the Hormuz disruption? It may be at bay right now, but things are going to take some time to normalize. One is that. And secondly, given all of that has happened so far, are you seeing that companies are now, moving away from just-in-time supply chains to, and instead paying more resilience premium?
Yeah. No, firstly, Kanishka, thanks for having me here. It's definitely an interesting time globally, but I think the reality is that since 2020, it's been one after the other, a supply chain crisis, one after the other, right? So it started with, of course, COVID, and that's where enterprises saw that building resilience, as you call it, in the supply chain is important. Then there was the chip shortage, then there's the Russia-Ukraine war, there's the Red Sea, there's now the West Asia, and time after time, companies have now seen that it's extremely important because it's not just one isolated incident. Right. Today, rerouting via, let's say, the Cape of Good Hope, it adds about 14 days of transit time, and it adds a lot of cost as well, right? And for things like, let's say, commodities where the margins are thin, it can add roughly 30% added costs, right? Now, that's a big number. But more so, I do think that supply chains are going from just-in-time to more resilience, right, where people are looking at, let's say, building excess inventory, all the other things, all the differentiated vendors, right, that are there to make sure that it's not about saving some cost on logistics, but really how do you build resilience.
Correct. We'll just talk about the cost bit in a second. Some of the other factors that have been at play, for instance, tariffs that the US has been trying to implement, that has been there for more than a year now, and that's an evolving situation still. So I want to understand how has that disrupted the entire ecosystem?
I think, from a tariffs perspective, I think the larger issue is the uncertainty. It's not about the actual tariffs, because I think given enough notice, supply chains, people find ways to evolve and to kind of make do with what is there. But I think there's a lot of uncertainty today, because of which people know that they need to have alternate suppliers. In place. They need to have shipping lanes, right? Shipping lines, contracts with different kind of vendors to ensure that they can have different lanes in place. So I think the uncertainty itself in the tariffs have caused a lot of, investment also in terms of technology to build more resilience.
Yeah.
Is what I'd say. Yeah.
Speaking of the cost, now with AI predicting routes, how much of your margins and freight costs can actually be protected, given that shipping routes are changing overnight, with incidents like this?
That's true. I think, look, the key thing that, as we were discussing about resilience, right? So people are less looking at costs today, but more looking at, how we can build resilience. Now, one of the key issues with the supply chain, logistics, it's a $10 trillion industry, right? It's huge, right? Pretty much the backbone of commerce. Everything we see around has moved from somewhere or the other to come here. Now, the big issue is that it's still run on pretty much desktop era systems, right? And spreadsheets. Now, what this does is it exposes a lot of fragility, and because of which in times like these, things break, right? So I think in terms of cost, I think it's more in terms of business continuity, where people are saying that, look, let me invest in AI to see how, because the manpower is also limited. If you're running on outdated systems, there's only so many invoices you can check. There's only so many decisions you can make. Now, our data, like over the last 5 years or so, our systems have cumulatively made over 30 billion decisions, right? And that's the proprietary data that we have today as Shipsy to drive some of these agentic decisions.
Correct. Let's talk about that in a bit. Just, before we head into the tech part of it, I want to understand, you were saying since 2020, the situation has been evolving very quickly. So say over the next 12 months, we have, till until 2030, say, what are some of the biggest risks that the logistics sector is looking at?
Yeah, I think, look, of course, the volatility around, oil overall is big. To give you an example, so, for example, you have customers in Australia, right? And I was just having a chat with some of them. It's a diesel economy for transportation, and diesel prices are up nearly 80%. And that's not a small number that someone can just adjust to. And it's not coming down anytime soon. Not just this, there are regulations that are now passed that imply that if you're charging your customer extra as a transportation company, you need to pass that on in a rightful manner to the drivers. Now, all of this needs investment in technology, it needs agility, right? So, I think everywhere people are seeing that, look, this uncertainty across, prices and cost is going to be there. So, I think that's one big driver. The second big driver that we're seeing over the next 3 to 4 years, right, is actually a shortage of people, right? And this may seem a little counterintuitive, but logistics has always been a very manually driven industry. Now, what's happening is because of, let's say, Chinese goods entering the market, because of, customer demands changing so fast, lot sizes are decreasing, right? Which means the number of shipments, the volumes are increasing. And if you look at markets like Europe, Australia, US, etc., there's only so many people to do. And if, let's say, the work becomes 10x, there's also a shortage of people, there's a shortage of drivers, right? So I think some of this, if you see, is what is driving enterprises towards saying that, okay, look, how can AI actually amplify the potential of people? People are firefighting today, there's just so much of work, right? And it's not fun work, to be honest, right? Let's just say that, right? And I think this is a way in which, let's say, a lot of the mundane work can potentially be done by agents, so that people can actually get time to look at the bigger picture, to look at customer experience, to look at building resilience.
I actually want to talk about profitability, say quick commerce. How profitable do you think these businesses are when you say the way AI is helping facilitating all of these functions, but at the same time globally, not just in India, a lot of investment is going into it, and at this point in time the question is whether this investment is going to yield results. Is what we saw with the SpaceX IPO and things like that. So your thoughts over there? What's happening?
I think, look, quick commerce is largely a phenomenon of regions where the cost of delivering is not prohibitive. Right, so which is why, let's say, it's seen tremendous progress in India, for example, in China. But if you see Europe, Australia, a lot of this is new to them. Right, they would be thankful if there's a same-day delivery, right? And I think that's the kind of innovation also, like from a technology perspective, that we've got, and being a company that kind of builds in India but for the world. I think the West now sees the East as not just, it really sees this as an innovation hub, especially for logistics, because of some of the things that you mentioned in terms of quick commerce, etc. So I think, look, workforce costs are rising, like even in India for that matter, and which is why I think there's going to be consolidation for sure, that's going to come. But I think the customer demands are there. Our preferences have changed. Now, I don't think we can look at a future where we don't have, instant delivery or same-day delivery. It's hard to imagine, waiting 4 or 5 days for something. So I think fundamentally, customer demands have changed, the behavior has changed, and which means that the industry is obviously there to stay. But I think there's a lot of investment in terms of technology that needs to come to drive up margins and productivity.
How soon is that translating?
It's happening now.
Yeah.
It's happening now actually, because let's say even when we work with some of the customers, the enterprises in, let's say, retail, we actually jointly take quarterly goals to reduce cost per order. There are work streams that say that, okay, look, how are we actually effectively going to reduce cost per order? So give you an example, batching in quick commerce, right? You would have seen maybe in the last few months, it's no longer, just one kind of driver coming to deliver your thing. That we're trying to find, an alternate stop in the middle, or let's say in the same society. And this is where AI comes in again, to see that, let's say in the in a span of say 2 to 3 minutes, let's say another order came from the same society, can we batch it together? Can we club it together? And this reduces cost per order.
And so at this point in time, what would you say is more important? What matters more? Is it speed, inventory accuracy, or profitability?
Yeah, I think it's it's an interesting choice. It's hard to. I think any company should keep an eye on all three. To be honest, right? But I think look, speed is kind of a given. I don't think people are over investing in speed. I think that time's done, right? In fact, people are now normalizing, saying that look, it's probably not 10 minutes. No, 30 minutes, 45 minutes, it's okay, right? So I think that is there. I'm seeing actually a lot of investment that is going into, let's say, things like accuracy, right? Because see, customer expectations are such that look, speed is there, but are you showing the right inventory?
Yeah.
Right? Because a poor customer expectation means that it also hits profitability, right? Because your the cost of acquisition, right? You cannot actually then see the results in terms of the lifetime value of the customer because they will drop off, right? So I think it's tightly linked. I would say that you.
Would you like to put them in an order?
Yeah, I think look, just meeting promises is right up there. I think enterprises globally are prioritizing reliability rather than speed. So I would put reliability right up there. That whatever promise it is, I'm going to meet it, because again, it's about predictability. Everyone needs predictability, right? Where supply chains go wrong is when, let's say, even the case of the tariffs that we were discussing, when predictability becomes a problem, things become a problem. So I would say reliability is right up there, and that leads to profitability and then speed. I think that's the sequence I would put it.
Okay, and we have been talking about how AI is taking real-time decisions, correct?
Yeah.
Who is to be held accountable if something goes wrong?
Yeah. I think that's a great question. At Shipsy, we've been very mindful in terms of the architecture of how this works, right? So today, any agent that is created has to report to a human. That's a fundamental constraint in the system, right? You cannot have an agent that is operating in isolation, right? All of the policies and guardrails are set such that it can only take certain types of decisions, and the human in the loop has to take some of the more sensitive decisions, like any payout related things or any finance related matters, for example, right? Or let's say, should you actually cancel a customer order, right? A lot of these are taken by the human, right?
Yeah.
Right? I'll give you another example. Today, invoices, settlements, enterprises can audit just about 10% of the invoices. It's a known fact in the industry that the leakage is between 2 to 4% of your total freight spend. So let's say if an enterprise is spending, say, 100 million on freight, which is actually pretty small, it's actually much higher, right? Imagine the leakage is about $4 to $5 million.
Yeah.
That's the business case right there, right? So I think it's not, we don't look at AI in terms of replacing what humans do. AI is about doing things that were not humanly possible before.
Yeah. And where are companies seeing the biggest returns from AI? Would it be cost savings, efficiency, or customer experience?
Yeah, I think, look, I would say hands down it's customer experience, right? A lot of business cases may be built on cost, but a lot of decisions today are not purely cost decisions. At least that's not what we are seeing, right? I think the clear thing is, and the way that, sometimes I like to put this is, let's say for every single customer, you had one human customer service representative, what would you do differently? For every driver, if you had one support representative, like a human support representative, how could you make the lives of drivers better? What would you do differently? We take those use cases and we get agents to do them.
Correct. And I also want to understand, you were talking about how they help in real time, how AI helps in real time. So in markets where, address system remain weak, even India for that matter, even in the remote areas. So how does technology solve that last mile problem?
Yeah. No, I think, look, that's a big one, right? In fact, today, a lot of the use cases that we have in emerging markets, to be able to drive efficiency, you need to have a lot more accuracy when it comes to addresses, right? And you'd be surprised at how unclear they are, right? So at Shipsy, we've processed north of 4 billion shipments. We have these pairs of address to lat long. We fundamentally understand address the way people write much better, right? We've taken so many decisions in the past, like the system has in terms of address to lat long. Now, this means that the agents we deploy to talk to the people to clarify some of these addresses, and that's the main use case of one of our agents, right, as part of Clara, right, to coordinate with the end customer to fetch some of these address details. Because we fundamentally understand addresses much better, we're able to have much better conversations compared to, let's say, a generic LLM or a frontier model, right? So I think there's significant value in doing that. We've seen accuracy in address go straight to the bottom line. It can save costs anywhere from 8 to 12%. So I think, yeah, it's definitely a big use case.
Okay. And what would you say is the next big bet that the logistics sector is making? Supply diversification, AI, automation, or something else?
Yeah, I think, look, AI is definitely right up there. Everyone wants to invest, right? I think everyone feels the pressure of much higher customer expectations, the pressure of rising costs. And I think everyone sees that if you don't invest, and I don't think it's about layering agents in isolation to broken systems. That's not the future that enterprises see. Enterprises fundamentally want intelligent systems that can help humans make better decisions and really drive significantly different outcomes for customers. So I think that's one of the biggest things out there, at least that we are seeing. And the automation is not just around software, hardware is big. So for example, robotics. So that's another big thing. Energy, right? Because of course, logistics is one of the biggest consumers of energy, right? So how green energy, so different forms of energy can come. So I think there's a number of different things, but I think AI is kind of right up there, at least when we see global enterprises to really meet these growing demands that are there.
All right, great. Thank you so much, Soham. It was lovely speaking with you.
Likewise, Kanishka.
Thank you so much.
Thank you.
Great. The future of global commerce will depend not just on what companies sell, but how efficiently and reliably they move. And increasingly, technology is becoming the deciding factor. The winner may be those who are able to balance speed, resilience, and efficiency all at once. That was Mr. Soham Chokshi, the co-founder and CEO of Shipsy, on Big Business Bet.